Hello and welcome to the Think Big series brought to you by PSG. I'm Alishia Seckam. Well, today's conversation comes as investors navigate global uncertainty, political transition at home, shifting capital flows, and rapid technological disruption, all while looking for growth, stability, and confidence in the future of the economy. Amidst it all, there's a new CEO at the helm of the JSE, and while she may be new to the title, she's certainly no stranger to the institution itself, with more than 2 decades of experience spanning capital markets, investment banking, and market infrastructure, and having previously served as Director of Capital Markets at the JSE, she's helped shape the evolution of South Africa's financial ecosystem from the inside. In fact, some have described her appointment as the perfect cocktail of continuity and change. Welcome to your screens this morning, Valdene Reddy, who's now Group Chief Executive of the JSE. Valdene, welcome to you and congratulations.
Hi, thank you. And wow, what a boisterous introduction. Certainly shoes I'd love to fill and a challenge well accepted. But you're absolutely excited to take the helm of the Johannesburg Stock Exchange and looking forward to a really exciting chapter ahead.
Perfect. And, I like the fact that you highlight that you're stepping into shoes because you're stepping in at a very interesting time. And I almost feel like when you step into the CEO position at the JSE, you should expect a baptism of fire. I mean, your predecessor took over just months before COVID restrictions locked down the global economy. You're stepping in amidst geopolitical fragmentation, trade tensions, market uncertainty, big shifts in capital flows, and then, of course, intense market volatility as well. So, first things first, how are you feeling?
Yeah, I'm feeling really excited about the role. So you're absolutely right. There's baptism by fire. And even though I've been an institutional veteran, if I can call it that, for the last 10 years at the JSE, you never quite understand the magnitude of the role as well as the external factors pushing in on you until you step into the role. So it's been real. I've been 6 weeks in the role now, and it's been absolute shift. With a lot of momentum and magnitude that's coming to say how big the role is, not just for South Africa, but for the organization and for the capital markets ecosystem. So I feel very good, energized, motivated, ambitious to run and run fast. And the time, we talk about a CEO for different seasons. I think my season for moving on pace and taking on bigger problems is really the chapter that the org is feeling motivated by and look forward to delivering good things, not just for the JSE, but for South African capital markets.
Look, despite all the uncertainty, the JSE did also cross the 1 billion rand profit mark for the first time in its history, right? Supported in part by renewed interest in South African assets. So, what do you think investors are suddenly seeing in South Africa today that perhaps they weren't seeing 2 or 3 years ago?
Yeah, it's a beautiful chapter at the moment. And as you mentioned, I have over 2 decades of experience in financial markets. So I've seen many cycles. The appeal factor for South Africa has never been stronger. And it's not just a regional play. Is South Africa on or off? Is emerging markets on or off? At the moment, we are representing such a credible investment profile as a country. The reason I say that is we had almost a decade overhang pre the 2024 Government of National Unity elections. South Africa was on a sell bias over that decade. We had our global relevance diluted as we saw other emerging markets flex their muscles, whether it was Brazil, Saudi Arabia, Argentina, India, China, ebb and flow. So South Africa had diminished, and then our own structural reforms at a country level was an overhang. Then you see a massive collaboration between public-private sector collaboration, deployment of capital, and a brave juncture for politics, where we, for the first time, have had our government of national unity. So, as you mentioned, the JC delivered record results in 2025, but that also came from a strong tailwind of South Africa's impetus changing since 2024. And what we've seen is a build on that. We haven't just had a one-hit wonder of, a short quarter of recovery. With South Africa being one of the best performing markets globally for now over 24 months and with lots of upside. Obviously, that's, all things being equal, and we get lots of pleasant surprises from global politics from Trump or from, sadly, geopolitical tensions that rear its head. But South Africa is proving very resilient on a structural basis, and then a very, very good exhibitor of a diversified defensive market to deliver supernatural returns in our market.
Yeah. That said, Valdene, I mean, how hard are we having to sell that value proposition that you've laid out there? Because when you look beneath some of the optimism that surfaced, right, there's still a legitimate question around the quality of the inflows we're seeing. So we've, yes, seen non-resident equity ownership on the JSE up from what, just over 29% to nearly 33% in 2025. But is that genuine long-term conviction returning to South Africa, or South Africa simply benefiting from global investors chasing yield and undervalued assets in the short term?
It's a combination of high quality and then, like you say, the yield chase in the short term, but also from passive flows shifting as South Africa's rating increases. You ask how hard the narrative is. The narrative has to be deliberate and it has to be sustained, and we have to follow through with execution or delivery criteria to actually have that high conviction investor sentiment shift to South Africa. So it has been a journey. We didn't just start this now in the last two years. So I think in terms of how hard it is, we have to continue the momentum of public-private sector conviction. So our locals reinvesting into our market with good governance, accountability, and execution. And that is what will give the foreign investors long-term conviction to stay invested in South Africa. Now, the market has shifted substantially. What we've been seeing over the last 24 months is we've been too hard to ignore. So those big, large, fundamental investors from offshore are paying attention. And now, once we've got a track record of sustained delivery and that we can have conviction that we will continue to have the structural reform and then the country deliver on a positive scale, we're starting to see the holdings now shift to more foreign holdings or interest. That's the money we want to convert, because that's not fast money that comes in and out. That actually is invested in the next 5 to 7 year opportunity that the country presents. And that's the shift we need. In the same vein, I mean, South Africa's outperformance is helping us because South Africa is now at about 4.5% in global EM indices. So once you get to about 5%, you're absolutely too hard to ignore. You're not a rounding error. So it's really an important momentum to continue. So it's not an easy narrative, but we have to prove that with good proof points of execution.
Yeah, and therein lies the crux of it all, right? The question, how does the JSE stay globally relevant, continue to attract flows, deepen market quality and liquidity as well? As you've taken over the reins, you've been quite emphatic about accelerating innovation and enhancing competitiveness through ongoing strategic transformation. Strip away the corporate language for us, Valdene. What practically changes at the JSE over the next 3 to 5 years under your leadership?
A great question, and it's lovely to address it because we're coming with so much clarity and refinement of what Forge 2031 vision is. So Forge 2031 is our next strategic shift under my leadership, where we build off from what we've delivered up until the end of this year, 2026, and really focusing on building a resilient exchange of the future. And you're right, it's so much more than saying, what is the technical jargon? What we're looking to deeper embed is the JSE has a long history and brand and credibility in what we represent. What we want to make relevant in this chapter is that we're investing in the right modernization of our technology and building the exchange of the future so that we don't just get crowded out from a massive pace of change, of disruption, evolution, growth, and innovation in global markets. You look at all the moves that's happening, whether it's the US that's surging in terms of their IPO valuations, or whether it's a whole digital access and a new type of investor that's being targeted through retail and digital, the burgeoning of new, I don't want to call them asset classes, but new investment opportunities like crypto or digital assets, so many. We want to stay at the forefront of that for the JSE so we can crowd in new investors. So some of the chapters of heading under Forge 2031 is how do we modernize and strengthen our market infrastructure? How do we also diversify and serve our clients better and grow more diversified and resilient business opportunities for South Africa and for the continent? How do we strengthen the appeal factor for capital formation in South Africa and get investment here? And then to make sure people are paying attention to South Africa, not because it's South Africa, but because we're globally competitive and relevant. We have a lot of sell points that are even stronger than some of the developed market exchanges at the moment. People used to chase listings in London or European markets. Now we're actually seeing that interest of investors and capital raise in South Africa, not because they have business operations in South Africa, but because South Africa has a strong globally competitive position. So that is some of the chapters of heading we're looking forward to in Forge 2031. And it will build off what we had, but a shift as well to an exchange of the future.
Yeah, because a financially strong JSE is one thing, right? But where the JSE is central to connecting capital to opportunity, that financial strength means little if the exchange continues shrinking in relevance, to the real economy. And I mean, the rhetoric or the narrative over the recent years has been fewer major listings, limited IPO excitement, weak economic growth, and that still dominates to an extent. So it's nice to see, that you're venturing into new spaces as you chase genuine, if we can call it, market vibrancy, right? What's that medium-term pipeline looking like? Is there a visible medium-term pipeline of listings that are emerging stronger right now for the JSE?
Absolutely. And that has been a fundamental shift for the last 24 to 26 months. We're not going to get a burgeoning of listings of fresh IPOs because we're a very institutional market, but the pipeline is looking much stronger and much higher quality. So you're absolutely right. Capital ultimately follows confidence, certainty, and efficient market structure. And our role as the JC is to ensure we provide all three of these. So we continue to see a selective listings pipeline globally, not just uniquely South Africa. So if you look, we will soon welcome Canal Plus. And again, South Africa offers lots of opportunity. So Canal Plus is a result of value in South Africa, where they bought multi-choice. Again, it results in a delisting, but what we do is we attract a bigger global corporate to South Africa. Coca-Cola bottling is one we're chasing, which is now under the Coca-Cola Hellenic chapter. And they again, did good M&A, but see the growth and liquidity coming out of South Africa for continental and for global flows. We are also chasing homegrown names like Fidelity Security, well known in South Africa, and a long-established business, which will be one that we look at. So when we speak to any of the market participants, the pipeline is looking much stronger, much more credible. However, timing still will matter. So two things, timing matters, and so you need conditions to be right, and the conditions are better, but in the height of global uncertainty with the geopolitical noise, it's just a little caution for maybe a delay. And secondly, because we're an institutional market, we still remain crowded to the top end of capital formation, the larger names. So your smaller and mid caps will still be a concern factor. They will still face delistings, but overall, the pipeline for capital raise, additional capital raise, sustainability bonds, all looking healthier and strong because our market can absorb it. Many of these listings, if you look at Optasia last year, largest fintech in Africa that listed on the JSE, multiple times oversubscribed. So it's deep capital formation for that listings pipeline.
All of that said, Valdene, I'm going to be bold, and if I can ask you to be frank in the response, right? In a world where companies have more funding options than ever before, is the traditional public market stock exchange model under pressure?
So in South Africa, it's a well-recognized and well-established one because it's an institutional market, and the institutional assets are deep. So it'll always remain a very credible part. And if you look, we are one of the few exchanges in the world where our market cap far surpasses that of the GDP of the country. So that shows you that the capital market strength will be one that lasts. We are 140, almost 140-year history. It will continue. But there's alternative forms of capital raise, as you mentioned. We've even launched JC Private Markets. You have to recognize people are looking for alternative funding opportunities. And we want to represent not just listings, but capital raise solutions for the ecosystem, because that's what funds the growth for South Africa and the returns profile. So we are looking even broader than our own exchange business of how we support funding along the value chain.
Yeah, and how you make it easier, less complicated, right? I know you've been talking about this new strategy into 2031, but part of the JSE's Vision 2026 and that initiative was a focus on simplifying listing requirements to stem the tide of delistings at the JSE and make it a market that's more attractive. But that's a balancing act that's very delicate, isn't it? Because while businesses want faster approvals and less onerous compliance, you've got investors that still expect strong governance and market integrity as well. So, how do you simplify regulation without weakening confidence in the market itself?
You're so right in saying it's a balancing act. We want to have investor confidence and protection, but you want to have an appeal factor that makes it easy for listing. So we've done probably a 4.5 year reforms on all our listing products, requirements, regulation. The ambit was to simplify or the ease or appeal of listings on the JSE. So we simplified our JSE rulebook, which is in process now. We've created a general, split the main board into a general and a prime segment to have the right size regulation for different companies. We've done an initiative for small caps on cutting the red tape. We've also streamlined our listings requirement to globally recognized majors. So it's very easy to convert your listing into South Africa. We've got our shop in order of increasing the appeal factor of being easy to list on the JSE or more appealing while maintaining the investor confidence. And then against that, you need to have all of these products and regulatory enablers mobilized so that when the markets turn and timing turns, you're ready. And that's what we've been seeing, getting the listings appeal more improved over the last 4 years. And then as that pipeline and market sentiment shifted, we've been ready to absorb that increase in capital raise.
Yeah. At the same time, technology and AI are reshaping trading, risk management, capital allocation globally as well. Do you see AI ultimately, strengthening market efficiency and transparency, or does it risk creating, faster, more opaque, and potentially more volatile markets?
So the potential is hard to ignore with AI, as we've seen in global use cases and on pace in terms of whether it's companies that have AI exposure that are being invested into or the use cases across every industry. We have embraced this, full on at the JSE. And in fact, when you ask us what will be the tools that helps us deliver faster or deliver more innovative solution with partnership models, AI adoption, innovation is actually the enabler. So we've looked at many use cases and we are well embedded in terms of how we adopt AI in terms of what the vision looks like. But you're right, you can't ignore it. It presents so many opportunities and it creates a more inclusionary way in terms of how people can now have access to enhancing their own skill sets or knowledge or applications by using tools like AI and other advanced innovation. However, there will be risks, as it would be in any industry. So, bearing the relevance versus the risks is an important factor. Certainly, as a financial market infrastructure, but even in down to an investor's profile and how they're investing. So it's a balancing act, but you have to embrace it. It's impossible to ignore.
Yeah, but it's also something you've got to embrace in the position you're in collectively as well, because there's so many stakeholders that need to get this landscape right and future ready, future fit. Given its role in enabling capital formation, we know that the JSE has been involved in various private sector initiatives, right, to actually strengthen South Africa's capital markets. But policymakers are equally critical in shaping investor confidence, driving capital flows as well. So, what are some of the levers you think that can still be pulled from a regulatory framework perspective that will help crank things up a bit? And I'm sorry, this question is now twofold, but in your conversations with government, with policy makers, with regulators, are they listening?
So there's lots more we can do in terms of increasing the whole appeal and competitiveness of South Africa with regulatory reforms or policy enablement. Um, Question you ask are they listening? Absolutely. We feel we are actually pushing against an open door at this point in time. It has come from years of relationship building and then getting into the detail of why these initiatives, reforms, regulatory changes, policy enablement actually is collectively good for South Africa. I'll give you two examples. If we look at, for example, we chair and we have an industry group that has showcased Operation Phumelela. It is capital markets reforms. We wanted it to stand against Operation Vulindlela, which is structural reforms, but for capital markets. We've got diversified voices and deep technical skills to enable government to say, how do we get these policies, regulation changes, or, increasing South Africa's competitiveness and appeal as a synthetic financial center. The door was open because in the budget speech given by the finance minister, they announced expanding or creating a synthetic financial center and expanding that whole core structure to asset managers in South Africa who can now manage multi-currency funds. So basically, it's a collective view of how we can onshore more offshore activity, get skills back to South Africa, get assets back to South Africa, get the right policy. So that's one example. There's many other examples. There's lots of policy enablements in the mining sector. We know that's a cyclical boom for South Africa, but holds a lot more opportunity because it came from a lag effect over the last decade of what wasn't manifesting. And if you look at majors like Australia and Canada, they have incentives and enablement of policy that opens that door. So there's lots of opportunity, but we are working really well between public and private sector, and it's a collective effort for good for South Africa. So I think that's where the trust comes in to say we will be bold and courageous to embrace these policies.
Bottom line, a stock exchange cannot truly thrive if the underlying economy itself remains structurally weak. And I must say, it's so refreshing to hear you say something like you're pushing against an open door. We haven't heard that kind of phrasing and that kind of rhetoric for the longest while. Having said that, for years, the dominant wealth strategy in South Africa has effectively been get your money offshore.
Yeah.
Does that concern you as the head of the country's exchange? And where do you think the balance should be when it comes to local conviction and global diversification?
It absolutely concerns us, and you're right. That was the narrative in 2022, 2023, even the early part of 2024. Why did people want to move their money offshore? Was two compounding factors. One is there was this, US excellence and exuberance in what you saw in your probably top 7 to 10 stocks in the US, far surpassed the returns of any market globally. And second, we then had a compounding factor with a lot of uncertainty in South Africa at a macro and political level. However, when we saw a lot of assets leave South Africa in 23 and 2022 and 2023, market participants have subsequently got hurt. One, the rand has strengthened quite substantially over that period. And two, South Africa has delivered unbelievable returns driven by a commodity rally, but it re-rated our whole market. So investors are paying attention now to the opportunity costs. And then secondly, as you lose assets in South Africa, you lose skills, you lose expertise, you lose revenue of management of funds. So people have really reawakened to saying there's much more value proposition to bring those assets back or to have global opportunities, but coming out of South Africa. That is the consensus we're seeing right now. A much stronger bias to saying, what can I get exposure from? To offshore markets, but from South Africa. And secondly, what can be managed out of South Africa that gives me global relevance, but the assets never leave? So there's a fundamental shift from, I think, 2 years ago where people are reinvesting back into South Africa, but seeing the opportunity of offshore from onshore. And that's a really strong positioning shift for us, I think, as a collective. Means we have better assets and skills and development in South Africa.
Yeah, you talk about this positioning shift, but there's also a market shift, right? Where we're starting now to speak to younger South Africans and younger South Africans who are perhaps investing differently, turning to offshore platforms, turning to, you alluded to it earlier in the conversation, crypto, alternative assets as well, often bypassing that traditional equity investing entirely. Is the JSE succeeding, Valdene, in democratizing investing and staying relevant to a younger generation? Or does the market still feel like, this institution built primarily for large corporates and institutional money?
So that's still a massive growth opportunity for all of us to tackle. You're right. We came up as an institutional market, and then the whole ecosystem serves an institutional client. But what we're seeing is our focus has also shifted to how do we get to a more inclusionary market, but that of all our stakeholders has also shifted. whether you look at your corporate client, whether you look at your banks, your brokers, they're all shifting, or even your intermediaries who have evolved to give very diversified product to the younger generation and to the retail client. Now, that has been the shift for the US markets. So we have a lot of growth to go, not just for South Africa, but even for the continent. I mean, we have so much potential, but it has to be innovative. It has to be easy to access. You need to have real-time information processing, access to data so that there's immediacy in how people can respond to investment ideas. But it's a growth opportunity. There's a lot we have to actually disintermediate to make it and disrupt to make it more inclusionary to a broader audience, a younger audience, a more agile and innovative, fast-thinking, forward-looking, relevant audience. So there's a lot of work to be done, but I think it's on the priority and the radar of many of our stakeholders, which then makes it right. How do we do this together? And we are certainly looking at working with our ecosystem to say, how do we have a more inclusionary marketplace to grow the retail client base and the younger generation investing?
As you've highlighted, it's because you're not just competing, or you're no longer just competing with other global exchanges. You're competing with private capital, alternative investment platforms, digital assets, and entirely new financial ecosystems that continue to evolve day by day. What keeps you awake at night, Valdene, from a competitive perspective when you think about the future of the JSE?
Yeah, there's a number of factors that I think, you have to bear a lot of cognizance to. One is, how do we ensure we keep the momentum of South Africa, that the conviction for our market can far withstand all the noise that's happening? I mean, that's much harder to solve for right now, given, there's from a war perspective, from a trade negotiation and bias, it's really hard to call which way that lands. So that's one thing that absolutely concerns us, because you can have this forward-looking strategy which can get dislocated by global noise and uncertainty. The other is, our own political landscape and how do we actually convert the conviction into growth? South Africa's growth ambitions are sitting at 1 to 2%. We need to get that to be more than 5%. Why? It shifts the whole South African market success story, not just an investment profile. It shifts the wealth distribution and the benefit that we have as a country, as a nation. So that's the second thing I think, which is directly correlated to the success of our business as well. So there's those are, I think, the two country level impacts. However, I do want to draw a personal attribute to this. Is the reason I love what I do at the JSE is it's my passion, which is markets, and it's my purpose, which is my country. This is a role that can actually enable those things that keep me awake at night. I can actually try and bring meaningful change in this role because the JSE impacts so many participants in South Africa.
Absolutely. And I mean, that's so, it's so great to hear you say, because you also talk about, a conviction to growth. There's a need to emphasize or put some spotlight on converting potential to growth as well. And that begs the question, is South Africa's market big enough on its own anymore, or does the future require this deeper African integration? I mean, I feel like we've been beating this drum for the longest while, as long as my career has spanned as well. And we're just not getting it quite right.
Yeah. So I think the potential lies at a country level and absolutely at a continental level. Country level, we have not reached maturity. I mean, we've got growth ambitions that will set us on a new chapter of relevance. And just shifting GDP from 2% to 5% or 2% to 6% is going to be massive as a country. We'll be a nation that cannot be ignored. So the potential for South Africa is here. And then you look at the sectors or the genres, there's untapped potential still left in mining. So there's resources, base resources. There's a burgeoning of renewables and what that segment looks like for South Africa. We have so much to do in infrastructure spend that will create opportunities. So South Africa's growth potential is still there, and there's a lot to scale up. But the global muscle, if I can call it, will be if the continent gets mobilized as a collective. That everybody's chasing Africa. And I mean, the potential in Africa is exponential. If South Africa gets that mobilization right with the rest of the continent, this region, this continent will be a global force. We've seen it in the East. We've seen it in India. We've seen it in South America. So the continent is lagging that potential. So it's our time now to actually,
Yeah.
flex up. Everyone wants a piece of Africa, and I hope as a continent we actually muscle in together to own our own strengths and potentials as a region.
So, talking flexing up, as we wrap up this conversation 5 years from now, Valdene, what metrics should South Africans judge your leadership by? More listings, greater liquidity, stronger retail participation, more African integration? What's it
I
going to be?
think I think impact and innovation would be the two concluding comments. One, impact is how does this JSE grow in a successful business value proposition to actually touch the world in terms of having a relevant marketplace, but also unlocking the potential for South Africa. And then innovation is because we are a financial and a technology company servicing the masses of an inclusionary market. Innovation is basically our right hand at the moment in terms of what we can adopt. As I said, our ambition in this next 5 years is to embed and to grow and scale a globally relevant, resilient exchange of the future. We don't want to leave South Africa behind, and the JSE wants to lead from the front of what that means for the market and the country. So that's what hopefully will be success in 5 years, establishing that position with the JSE leading the charge for the country.
Well, that's the yardstick, Valdene. Best of luck as you start this next chapter and pursue measuring up to your own standards. I mean, what a pleasure it's been catching up with you today. Valdene Reddy is Group CEO of the JSC. And that's it for this episode of Think Big. Remember, the series is free, it's shareable, it's available to anyone, whether you're a PSG client or not. From me, Alishia Seckam, it's goodbye until the next one.